people shifting their behavior, expectations are increasing, rising internet penetration, disposable income has increased, valued at $60 billion in India. Investors have a lot of confidence in this company which is still loss making. What are the attractive stocks in this space? This industry could grow up to $300 billion. Let's try to understand what are the risks associated with these stocks. The new revolution in India's retail space is where you can order your groceries and get them delivered to your home in just 10 minutes. We are talking about the revolution of quick commerce and e-commerce in India in this video. E-commerce space in India has gone a transformative evolution, especially with the advent of quick commerce in the recent times. So while this industry is relatively new in India and quite unlike the US where you already have the Amazons of the world listed in the market for a while, e-commerce is emerging as a very attractive sector for investors right now, and people shifting their behavior from offline retail to online retail. So in this video we are going to understand the value chain of these stocks, understand what are the sectors and the related industries that gain from this revolution, what are the attractive stocks in this space, what are the opportunities that are leading to growth in this space, as well as the profitability and the valuation dynamics of these stocks. Stay tuned, this is going to be an interesting video. India's e-commerce industry in the recent times has seen an exponential growth. It has been driven by smartphone penetration, easy payment access, and the growing middle class. This industry right now is valued at $60 billion in India, and it is up 22% from the last year. So you can imagine the growth. Projections actually indicate that this industry could grow up to $300 billion by the year 2030. So there is a very fast paced growth ahead. Quick commerce on the other hand is based on ultra fast e-commerce, right? You can order something and you get it delivered within 10 to 30 minutes at your doorstep. This has been gaining a lot of traction and is a new thing that you're seeing in India. Now this industry is valued at 6 billion right now, and it is projected to grow at 60 billion by 2030. So it has an even faster growth path ahead. So before we go into the value chain, let's try to understand why these industries are growing. So the first reason for the growth of e-commerce is the rising internet penetration. You have more than 900 million smartphone users in India, and like everything else, they are finding it easier to order things on their phone than the offline mode. India also has a growing smartphone usage among the highest in the world. You're seeing increasing urbanization and changing lifestyle, especially in the middle class. We talked about the middle class and the growing premiumization trend in the last video. Another key driver here is the payment system. UPI is world renowned. Various other countries are adapting to it. Similarly, logistic companies, when you order something, it has to be shipped on time. The rise of very strong logistic players has also been a reason for the growth of e-commerce. Finally, the growth of tier 2 and tier 3 companies. So you will see that all these large e-commerce and quick commerce are now targeting the tier 2 and tier 3 cities of India. That is because there's been a rapid growth in income across those cities. Finally, disposable income has increased. Obviously, after the pandemic, we have changed our habits where we sort of want to get things delivered. That whole mindset has changed, and obviously it has a lot of convenience and time saving, which makes it very attractive. So let's try to understand the value chain of e-commerce in India. So the first one is the product sourcing and inventory management. This includes players which are procuring these products from manufacturers and obviously maintaining an inventory so that they are able to meet consumer demands. Second, you have online platform management. Here you have to create a good user friendly platform where people can search, select, buy and transact and do everything in a very smooth manner. Third party is the payment processing. So here you have to implement secure ways of payment and include the various ways, for example UPI to credit cards to banking. Finally, you have order fulfillment and logistics. So timely delivery needs a strong logistic network which includes warehousing, packaging and last mile delivery. Finally, post the delivery you have to have customer support. So managing customer inquiries, refunds, queries is the last part of this process. Now the value chain of quick commerce is a little bit different from e-commerce. The first part is the dark stores. These dark stores are small strategically located warehouses in key areas of the city which will make delivery of these high demand items becomes easy and quick. Second very important aspect of quick commerce is inventory optimization. Seeing the real-time demand, seeing the real-time patterns, you have to optimize your inventory, and you in fact have to use a lot of data science to sort of optimize this to minimize stock getting out of stock or overstocking something. Third aspect is technology integration. So you have to actually show everything real time. So whenever you order something from a quick commerce platform, you see real time movement of your delivery executive. Has it been shipped? Has it been packed? And finally, the last mile delivery. So that is where your whole fleet of delivery executives come in who ensure the last mile delivery and orders reaching you on time. So that was a quick overview of the e-commerce and quick commerce value chain. Let's try to understand what are the different sectors which are related to this space. So you have the logistic providers who are going to do the shipping, warehousing and managing the last mile delivery. You have your payment processors or fintech, right? People who are ensuring that the payments happen in a seamless fashion. And finally, the technology and software development. It's a key aspect of the quick commerce companies also. So let's come over to the interesting part of the video where we talk about there in this space where we can invest. Obviously, many investors are already well aware of this industry, so there's nothing much to add in this particular space. So first, let's talk about the e-commerce plays. Flipkart and Amazon India have a wide range of offering, from electronics to home goods to grocery to pharmacy. They sort of cater to everything and they form the key players in the e-commerce space. But along with that, you have various smaller players as well as larger chains like Reliance or Tata Group trying to make foray into this space. Now, in terms of quick commerce players, we all know the three big names. There is Swiggy, Instamart, the recently IPO'd Swiggy, which has the Instamart offering. Then you have Blinkit by Zomato, which was formerly Grofers, but after being acquired by Zomato has seen a very fast growth. And then you have the newcomer Zepto, run by Gen Z founders, but seeing very rapid adoption and growth. We've seen smaller players also try to make foray into this space. Now, in terms of logistic and delivery services, the well-known name is Delhivery, which a lot of these parties rely on. There is also Ecom Express, which sort of specializes in e-commerce delivery. Finally, you have payment gateway players and fintechs, which specialize in catering to these e-commerce players. So here you have names like Paytm. You also have PhonePe and Razorpay, which cater to the demands of different e-commerce and quick commerce platforms. So these stocks that we have named, from Zomato to Swiggy, have seen a very fast demand in the recent time. Zomato has been the investor favorite for a while, especially after the acquisition of Blinkit, and Swiggy after the IPO saw a big demand. So we have to understand the profitability and the valuation metrics of these different players before we take our investment decisions. So talking about them briefly, Swiggy is one key player. It has recently IPO'd, and in terms of profitability, it is still loss-making. Even though it has narrowed its deficits, their investments in the quick commerce space have sort of weighed on their losses. But Instamart by Swiggy has seen tremendous growth over the past few years. And if it follows Zomato's footsteps and turns profitable, it should have a lot more investor traction ahead. Now, second, we have Zomato. Zomato in the second quarter has seen a rapid growth in profit. Its profits have actually grown 5-fold, but they fell a little bit from analyst expectation. Therefore, the stock has had some negative reaction, and this has been because of the cost associated with it growing its quick commerce platform. Now, in terms of valuations, while quick commerce is increasing Zomato's revenues, its profitability is still a concern. That space is still growing. There's still a lot of investments going on, so profitability could be a little bit far off in this space. Now, let's talk about Zepto, which is an unlisted player. Zepto in the recent filings has said that it has a path to profitability in the next 2.5 quarters, and what it has said is it's more than 330 dark stores are all profitable on the contribution level. So the rapid growth that Zepto is getting and the rapid funding that it is able to sort of secure talks about the potential of this company, which is now valued at $5 billion. So obviously everything looks very bright in this space, but let's try to understand what are the risks associated with these stocks. So obviously number one is there is intense competition. While Zomato and Swiggy might be friendly on social media, there is intense competition between the two, and then you have Zepto and the new players coming in, which will sort of pose significant significant challenge, and obviously the larger players like Flipkart, Amazon, Reliance, everybody is also sort of trying to foray into this space. Second is the customer acquisition cost is still very high. These companies have to offer a lot of discounts, a lot of freebies to acquire customers. They have thin profit margins, so they are not making a lot of money from these different transactions. They face the regular business challenges like supply chain disruption. There's a lot of logistics involved which can be disrupted. The regulatory challenges, the regulator can come and sort of disrupt this space if they find anything going against the spirit of business. The customer expectations are increasing every day. You see threads on social media criticizing these players. And finally, you have risk from data security and cyber security as well. Everything here is technology driven and data driven. These companies are heavily dependent on external funding. Finally, the consumer behavior can shift with inflationary pressures or changing demand in the economy, and that can have an impact on these players. So that was our quick overview of India's e-commerce and quick commerce industry. While the stocks are very few and very high in demand, we expect this industry to grow at a very rapid pace and bring in more potential publicly listed players in this space. So if you liked our video on the e-commerce and quick commerce industries, please do give us a feedback in the comment section. Like this video, share it with your friends, and subscribe to our channel. Also, you could let us know what you would like us to talk about next. Till then, happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.